Hey there, folks. Coming at you with this week's market wrap and sector watch for next week. What an amazing week it was for the markets. Unbelievable turn of events. Uh, the way the markets reacted after the election was nothing short of amazing. And I think, I doubt that this is a one couple of day event. I do think that went a little too far too fast and likely see some a pullback or some consolidation, which actually would be pretty healthy thing to see happen. Um, this was a very nice surprise right at the end of the day. Talked with the pro members over at Alpha Wolf Trading about this stock here in pre-market prep video, and actually got involved in this for a swing, and it's already hit both my targets, which is pretty amazing. But this could be actually a gap up uh, opportunity next week. They just reported earnings. The stock really didn't do anything all day, right up until about the end of the day, and then it just shot up like a rocket on pretty good volume. Likely going to have some resistance right here at about $2, but could get a little bit of a gap, maybe go up and test somewhere in 215, 230 area, maybe get a little bit of follow through. I mean, it has gone up and it has had some pretty impressive runs. I would not chase this thing on Monday, but could be worth watching next week. It was pretty good earnings report, and I think they have potential. Um, they're coming up into their busiest season, which is the holiday season, and I think they guided fairly conservatively. But this is an interesting play. It's very thin, very small, 16.4 million shares in the float. So you have to be very very careful there. But let's go ahead and start taking a look at what's going on in the markets. And we basically came up and tested this trend line here, the short-term trend line in the Nasdaq. And it's funny, the Nasdaq, the big Nasdaq names, Apple, um, Amazon, and a lot of the big tech names that were really uh, pretty vocal about the fact that they did not like Trump. Those seems to take a bit of a hit this week. And then you had a rotation into some industrial names. You had some rotation into some of the infrastructure plays, some of the coal and all these biotech had a very healthy bounce. But like I said, we moved pretty far, pretty fast, and the reality of a Trump presidency and a Republican-held House and Senate is still going to be something that is going to work itself out, right? So we don't really know what the impact of all this stuff is going to be, but the initial reaction was pretty darn impressive. So financials were one of the sectors that had a huge week, I mean, a massive week, on the thought of rising interest rates and potential infrastructure spend, and hopefully a relaxing of some of the lending rules and all this other stuff. So we'll see how it plays out. But financials had a huge move. FAS, look, we're out of the upper Bollinger Band here. Definitely getting a bit extended. Would not be surprised if we saw a pullback in financials. A lot of big names, Goldman Sachs, Morgan Stanley, Bank of America, all of them very big moves, typically not big movers. The Fed will start to come back into focus. And like I said, I think this is gotten too far too fast. What we want to see now is we want to see it pull back, consolidate, build some type of a base before making its next move. Let's talk about what happened in gold today. So, over at Alpha Wolf Trading, for the pro members, doing a pre-market our post-market wrap yesterday, we talked about 119 being a very significant spot for uh, gold. And that is where we closed basically yesterday after kissing it. We closed right above 119 and suggested that if we break down below 119 with any kind of conviction, it could be a nasty, nasty day for gold and for the triple levered ETFs like JNUG and Nugget. And we had some news come out about actually we've had a lot of news in the last couple of days of one individual on CNBC saying he immediately sold all of his gold holdings, and then you had another individual today saying that gold wasn't exactly one of his favorite places to be right now, and then we had this chatter of a big liquidation, $10 billion or something like that in gold, and it just cratered, right? And we saw that carry over into JNUG and Nugget, and you also saw it carry over into the inverse, Dust and J Dust. So these also now are completely or getting out of the lower Bollinger Band. We could see some type of a snapback trade opportunity here. But this was a pretty brutal day for JNUG. Could find some support right here around $6 or so. Let's take a look at Nugget. Right, very similar to JNUG. And if you look at Dust and J Dust, which we talked about yesterday, they had amazing runs. Was thinking that we could come up and test in this 5190 area and find some potential price resistance, and it blew right through that up to $56, which we've got some price resistance there. Got the 100 EMA just overhead. Could find some resistance there. That's up at about $60 or so. Could see a continuation in this move, but I would be very, very cautious in chasing that type of a move. Could see a little bit of a snapback. And let's take a look at J Dust. So these were just massive movers today. Did set an area of potential target for J Dust right around $47. We had a target here also around 36, and it blew right through that. So could get a continuation of that, but like I said, I would not chase. Let's take a look at what the dollar did. The dollar actually did not. It's holding up right in an area of potential price resistance. It didn't have a big move higher today. That gold move really was gold specific and not really tied to a move in the dollar, but we still need to pay attention to the dollar strength. And a strong dollar is not necessarily a great thing, not a great thing for multinational companies, not a great thing in terms of earnings, right? Foreign exchange. Hold on one second. Okay, sorry about that. Where was I? So dollar is at an area of potential resistance, price resistance. We'll see if we get a little bit of a pullback next week, or if we can take out this 25.60 area. And like I was saying, that's not necessarily great things for multinational companies or earnings. So keep that in mind. Since I'm here, let's go ahead and talk about volatility. We had quite the drop off. We had an amazing run in volatility, which you typically just don't see this, right? You don't see this when 9 days in a row, and then the election happened, and we had a huge pullback in volatility, but still pretty contained within the Bollinger Band. So it hasn't gone parabolic to the downside, and we could see some complacency in this market Unless we get some kind of a snapback in the markets, then we could see a little spike in volatility, and it's certainly worth keeping an eye on for intraday trading opportunities, UVXY or TVIX, either one. Let's just take a look at TVIX real quick. So worth keeping an eye on volatility if we were to get some kind of a pullback in the market. So let's take a look at some of the other indexes here. The IBB. So if we look at the IBB, we bounced right up into this long-term trend line resistance. Now, the thing about this is, we have gaps on the dailies for a lot of these indexes, right? We've got gaps that will likely fill. Not all gaps do fill, but came up into an area of resistance. It wouldn't be a huge shocker if we were to drift lower, maybe get the market settled down a little bit. Biotechs obviously popped because the new administration is perceived as to not have this the drug companies on their radar as much as the other administration would have. So got a nice big pop, but it would not be a big shocker if we were to see this drift lower and try to potentially fill the gap. So I would suggest that you want to be somewhat cautious in that space. If you don't want to play individual names, you can look at Labu, which had an amazing run and is piercing the upper Bollinger Band. And if we get some kind of a dramatic pullback, you could look at LABD, which is the reverse inverse. And if you really start to get a pullback in the IBB, there could be a potential trading opportunity in LABD. Let's take a look at IWM, which is had a very very impressive week. Piercing the upper Bollinger Band. Again, we do have gaps on the daily. We've got a gap here that at some point may likely fill, but could see this pull back into this trend line here. See if this acts as support. Maybe pull back to 124 or so, see if that acts as price support, but getting a little extended. Massive volume in the IWM. Massive relative volume, I should say. But it wouldn't be a huge shocker if we were to pull back a bit, because we are starting to get extended. If we're looking at all-time highs here, or no, wait a minute. Let me take a look. Yep, that is all-time highs. Okay, all-time highs are right around 129.40 or so. I would expect some resistance there, and then maybe a pullback. Let's take a look at IYT, which was also another sector that had a pretty amazing bounce, completely out of the upper Bollinger Band, so a bit extended there in transportation. Wouldn't be a shocker if we were to pull back and test this 149 area of price resistance to see if that turns into price support. Let's take a look at the SMH, which NVIDIA was an absolute beast. Saw those earnings last night and really did not want to chase this thing because it was gapping, but it gapped and just kept right on going. And very impressive move out of the upper Bollinger Band. Another one that you probably don't want to chase. You probably want to look for this to pull back, or at the very minimum consolidate, maybe build a flag. You do have this gap on the daily to contend with. So that gave some strength to the SMH, which has been trying to hold on to this $66 level and the 50 EMA. It's been flirting with it, bouncing off, and then had a couple of days where it pierced below the 50 EMA. Now we've got a nice strong bounce today, closed nearly at the high, coming up into this little short trend line for potential resistance. But the SMH has been a strong sector for several months. So, it's also flirting with all-time highs. So, you could look for it to get a continuation, maybe go up and test this $70 area of price resistance and see how it acts there. But wouldn't be all that shocking if we were to find some resistance there, maybe consolidate a bit. But SMH, very nice move today. S&P 500 up 1, 2, 3, 4 days in a row. Had a little bit of a pull today. Coming up into resistance right around 21.88 or so. See how it acts next week. Would not be, again, a shocker if we were to pull back. Let's see, we do have a gap on the daily here that at some point could fill. See if it pulls back into this 2140 area where the 50 EMA is. See if that can hold as support. If it breaks below there, could get a little challenging. All right, let's see what else we've got going on. TZA, which, if we do get a pullback in the IWM, could be a day trading opportunity. So I would have that on your radar. Let's look at some other individual indexes here. Aerospace and defense, beast. There's there are a couple of theories as to why that could be happening, right? Either people are afraid that maybe we're going to go to war in the next 6 months, or Trump has indicated that he's going to spend some money in aerospace and defense, rebuild our defense. So a big pop in defense, gaps on the daily. So likely that we will see some type of a pull in aerospace and defense. Come back down, maybe test this 59, 57 area as potential price support, or we could just consolidate a bit and work our way back into the Bollinger Band. But these gaps on the daily are concerning, and at some point I think they do get filled, so you got to be real careful there. I would not be chasing anything. XBI, so that's biotech. We already talked about that. Let's look at home builders. Home builders had a pretty interesting little move this week. Even with the thought of interest rates going up, home builders had a pretty nice little bounce. Came up right into resistance at the 50 EMA. Came up into this price resistance right around 33 bucks. Let's just call it that. Could see a pullback there in the home builders. I still don't think this is the best time of year to be messing around in the home builders with the holidays and winter and all that, but was a pretty impressive little bounce there. But this XHB is just not home builders. It's also, I think, Home Depot and some of the stores, retailers in that space. So XIV, all right, that's the volatility. We don't need to talk about that. Let's talk about materials. So, materials had a nice bounce. Copper had a nice pop. So some of the steel names had a nice move. You start thinking about infrastructure. You start thinking about steel and cement and all those types of things that go into a big infrastructure spend. So you did have materials moving. It looks like we've already closed the gap there. Looking at this area of 47.80 as potential price support. Came down, kissed it today, bounced up. We'll see if we can continue to hold that support next week, but I do think that space could still be in play. I doubt that this is but it's up 1, 2, 3, 4, 5 days in a row out of the Bollinger Band. So would it be a big shocker if we were to pull back to the 50 EMA here at 47.29, where we've got a little bit of price support? It would not be a big shocker if that were to happen. So, but definitely a sector that I think could be, we could see some rotation into, right? Been a pretty beaten down sector, materials, so I think it's worth paying attention to. Oil and energy. So we did have a pullback in the USO. Let's take a look at that real quick. Broke some key support today, closed below it at $9.80. We were looking at looking at that as a potential area of support at Alpha Wolf Trading with the members, and we actually broke below that. We were talking about the fact that this kind of looked like a bear flag, and we were potentially heading lower. And once oil fell below that, $50 a barrel, and now below $45 a barrel, seeing some weakness. We've had a big production increase in oil since the price has climbed back up. You've got more rigs coming online, so you're seeing some weakness there in oil. That could continue, so I think you need to be careful with the energy names in general. And with oil itself, so there are a couple of ETFs or ETNs that you can play. ERY is a bear energy ETF that you could look to play. DRIP is another one if we really start to see more weakness in oil. So have those on your radar. All right, let's take a look at. All right, we just did the energy. Let's take a look. Financials. We already talked about those. FAS. I mean, out of the Bollinger Band. Could pull all the way back into this $19 area where you have some price resistance. This could then act as support. You've got the gap on the daily to fill. Maybe it only comes down and fills that gap, works its way back into the Bollinger Band. But I would think that financials probably would see some type of a pull. And let's see, industrials, another one that had an amazing run, completely out of the upper Bollinger Band. I would think that we get some type of pullback in these names in the industrial sector. Maybe come back down, test that $59 area as potential support, fill the gap. But very convincing move in the industrials. But think about the fact that if the dollar continues to rise, that would probably put some pressure on the big industrial names. Safety apparently is not a safety place to go, right? So we've got the threat of rates rising, and the utilities got taken out to the woodshed today. So, Pierce and the Bollinger Band, Pierce and the lower Bollinger Band do have a gap on the daily that potentially could fill. Could be some type of a snapback play here, or could just build out a nice little bear flag here before breaking lower. So, I don't think utilities are really someplace that you want to be at this particular point in time. Healthcare had a nice pop. It did break over this trend line of resistance, but then closed below it today, sitting right on top of the 50 EMA and the 200-day moving average. We'll see if we come down and maybe fill this gap down to about 68.50 or so. Consumer discretionary actually had a nice little bounce this week, but been talking to the pro members over at Alpha Wolf Trading that the key area to get it over is this 80.27. Get back within this channel that it sat in for 1, 2, 3 months, bouncing between these two areas of resistance and support. We pierced the lower Bollinger Band, had a nice little snapback here, reclaimed this short-term trend line, but this remains the area right here, 80.25, 80.50. Need to break over there and hold as support, and maybe we get some nice action in consumer discretionary. go up testing this 82 area. Metals and mining. So we did have the big gap, and that, it's kind of counterintuitive to seeing what happened with gold and the precious metals. But metals and mining, it's copper, it's some of the other coal, those types of things, which had really nice bounce this week out of the upper Bollinger Band. Big gap to fill on the daily. These are not things that I think you want to chase after this type of move. You want to look, but I do think you want to look for an opportunity on a pullback, maybe to get involved, especially if we start hearing more definitive types of plans coming out of the new administration that would benefit these types of industries. So I think you're going to start hearing that kind of stuff, and that could drive some pretty nice moves. So definitely a sector to keep an eye on. XOP, oil exploration production. I already said that you probably need to be cautious in that area. And retail, got some decent numbers out of some retailers this week in the earnings, and got a nice little pop, nice little bounce in that sector. Took out this trend line, but again, we do have this gap on the daily to contend with. We are piercing the upper Bollinger Band and an area of potential price resistance right here around 44.50. Let's just call it $45. Nice round number, but you can see that it's acted as resistance, it's acted as support, acted as resistance. So it wouldn't be a shocker if we were to stall out here. All right, so that is my take on what happened this week and what we could be looking at next week. I think that we need to be cautious and not chasing anything. Let this market settle down a little bit. Let's see what kind of rhetoric we start to get out of the new administration and see how the market reacts. But unbelievable events that took place this week, and I'm really hopeful that this new administration is wacky and crazy as some of the things that have been said. I really am hoping that this guy has a golden opportunity to do what I think the previous administration didn't do, which is unite everybody. I really, really hope that we don't do what happened. I was very excited. I'll be very honest that I was very excited about the previous administration when first was running, thinking that there was really going to get some things done. And when they made the move of pushing through Obamacare without any Republican support, that was really a divisive thing to do. And I really hope that this administration, because they have the House and the Senate, does not do the same, create the same mistake. I hope that things get done with both sides coming together and uniting to make things happen. And I think if that does happen, if those things do happen, that could be tremendous for the markets, our economy. It really is a golden opportunity, and I really hope that it happens, because I think it could be fantastic for the economy. I'm a very optimistic individual, and I would like to think that is the path that they will take, that we will have learned from the mistakes that were made from the previous administration and do the right thing. So enough of that. I mean, I don't mean to get political at all. I just care about the country and the direction we head in, and I hope we can figure out a good path for all. All right, so here's the deal. Listen, I have a big party this weekend. UFC fight. I'm planning on doing stocks to watch for next week on Ticker TV on Sunday, 8 a.m. I am not going to promise that I'm going to do it, though, because I just know it's going to be a big party. It's going to be a lot of fun, and I just don't know how much pain I'll be in on Sunday morning. So I do plan to do it. So look for me to tweet out whether or not doing stocks to watch live. Join us at Ticker TV for that. If I do it, and if I don't, I'll make sure everybody knows that I'm in way too much pain to be able to do so, but I am going to attempt it. All right, so if you like what I do here, come check us out over at alphawolftrading.com. Free chat room for everybody, investors, swing traders, day traders. It's just a room for idea generation. It's a free chat room. There is no hidden agenda there at all. So if you like what I do here, come over, check it out. Have a fantastic weekend. Be safe. Have fun. And I will see you all next week.